Good morning. Happy Thursday. Happy Thursday. Wow. Thursday, fall, week away from Halloween. Exciting. Let's talk about renovation. I came across an article in the Wall Street Journal. It was a really good article. I posted a link in the notes. I also did a LinkedIn post where I posted a link and summarized the article. Depending on how many articles you pulled up in the Wall Street Journal, whether you subscribe to or not, you may or may not be able to get to the article. It might be behind a paywall for you. If so, if you go to my LinkedIn site, I summarize the article, the key points on my LinkedIn site, and you can pretty much get the key info there. But let's talk about it today. So the article, as the title says, America's primed for a home renovation resurgence. And when you kind of look back at it, renovations surged during the pandemic when Americans were stuck at home, and then it dropped off after the pandemic. And what that was is that it was a classic case of demand pull forward. People who were stuck at home, they did renovations sooner than they expected, and they got more done. And then interest came up, and that caused a swoon or a drop, a pretty sharp drop in renovation, right? So I think it was the Harvard University Joint Center for Housing Studies last week published a report suggesting they expect home renovation or they expect spending on home renovation to reach 477 billion next year, which is a crazy amount, right? Which would be a record. The previous record, where we approached the previous record of 487 billion. So Harvard Joint Studies for Housing says they expect about 477 billion dollars in renovation next year. Is that crazy? That's a lot. We really haven't done a lot of renovation product lately, and so if you're and if you think people with the lock-in effect, these people with 2.5, 2.75, 3% interest rates, they're not going to move. They're going to renovate. And most likely, if you have a low rate, you're going to renovate using a home equity line of credit or a fixed rate second. Now, if you got your house in the last couple of years, you've seen some appreciation, you might have a higher rate, you might do a cash out. But if not, you're going to do a fixed rate second. I was thinking about this. A lot of times we get prejudice against seconds. But if we help somebody purchase a home for, say they buy a $600,000 home, they put $300,000 down, and so we do a $300,000 loan, first mortgage, right? We're excited to do that first mortgage. But for some reason, when it comes for them to do the renovation and they want to do a $300,000 second, we're not as excited. It's the same loan amount. I mean, we potentially get paid the same. We have to look at that as a good loan. Not only do we want to serve our clients and serve the relationship, we want to look at that as a good loan. So it's kind of interesting, because of the demand pull forward of the accelerated amount of renovations done during the pandemic, it caused a little bit of a slump post-pandemic. And here's some really interesting things that I didn't know. Maybe these statistics you'll find them interesting. Sawmills in the United States send 40% of their output for repairs and remodeling jobs. Who would have thought that? So all the wood the sawmill makes in the United States, 40% goes to home repairs or renovations. And so when renovation activity, slumped after the pandemic, sawmills started to close. And so there's been quite a few closures across North America. Same thing if you look at recently, True Value, filed for bankruptcy and is now selling to Do It Best. Once again, it's linked to this slump in home repairs and home renovations. And then if you look at publicly traded companies such as Pool Corp or the decking company Tyrex, their stocks have fallen 12 to 40% or 12 to 25% because of this drop in business. And so what that means is there's pent up demand for these renovations, and people are now resigned to living in their houses longer, and they have record equity. And so that's part of the reason why this Harvard University Joint Studies on Housing thinks there's going to be a boom in renovation. Now, since I've been in mortgage, I've constantly been told there's going to be a boom in renovation. And as a leader recruiting, loan officers always ask me, what's my renovation product we have? And the fact is, nobody ever does renovation. I mean, I don't know. I mean, when I say no one, I mean, if you're a large company and you do 100 renovation loans a month, you're going to be number one, right? It's just not that much business, but that might be changing. It might be time for us to change our attitudes towards renovation. Now, part of it is that Americans have a record amount of home equity. Now, John Burns says it's 35 trillion. I've seen numbers that say it's 37 trillion. Whatever it is, it's a lot. It's a lot of trillions, right? So let's say 35, although I think it's 37. By the way, that home equity is up 81% since 2019. Is that crazy? 81%. And the average homeowner has $400,000 in equity. The average homeowner. Isn't that wonderful? Isn't that fantastic? And so what that comes to is all that equity, they're expecting 300 billion plus a month in renovation. I'd like to do some of that. I love renovation. Renovation is fun, right? And so they think there's going to be a little boom. Now, here's something interesting. John Burns surveyed 475 households and about renovation, and they asked them how they plan to fund it and then what they plan to do. And they broke it down into two groups: 30 somethings, people around 30 plus or minus, 10 years, 30, and then people that are over 30. And people in the 30 somethings, they expect to spend about $60,000 on the home renovation, and then the elder people think about $30,000. Now I did a couple renovations the last couple of years, and matter of fact I'm doing one right now. Whatever you think it is, double it, and if you're not disciplined, triple it. And it's going to take twice to three times as long as you think. But so if you think it's 60,000, you're looking at 120, right? The 30 somethings are motivated by marriages, babies, career changes, and they're less sensitive to interest rates. They want to remodel sooner because they have life events. Where the elder people, they want to know when it's going to be, cost effective before they splurge on a deck or a new kitchen. And by the way, decks were one of the fastest growing amenities in a home. That was the National Association of Home Builders came out with a report last month. So you got all that. Refinances are up 50% year over year in September, 8% or 6% up from August. You're going to see acceleration of cash out refinances, especially as interest rates drop. You're going to see, HELOCs and fixed rate seconds are exponentially increasing. So it's really potentially a boom market. And what's interesting too? The lock-in effect where people aren't moving because they're preserving their interest rate, that also had an impact on the whole renovation and construction business, because when people go to list their house, they do a lot of repairs. They fix the deferred maintenance, they do some improvements, they get their house ready to sell. Because fewer houses are selling on the market, that further depressed the renovation suppliers, the people that do the renovation, whether it was those sawmills or the Ace Hardwares, whatever, the pool companies, all that stuff. And so now they think with lower rates and all this equity, we're going to have a huge boom. So, point of my live this morning: give renovation a second look. If you're a company, you might want to dust off the old renovation guidelines. You might want to go back to your investors and see what's out there. Get some cutting edge product. Figure out how you can do fund control. It could be a viable product. And it could be a recruiting tool. If you're a loan officer, renovation is great, because if you do, depends type of renovation loan. Typically, if you do a full renovation loan versus a HELOC or a fixed rate second, you're going to get a chance to refinance in about 6 or 8 months or 10 months. So you get 2 deals and you get a really enthusiastic customer. So really go after those renovations. And of course, if you want to hit the easy button, the easiest way to do a renovation is do a fixed rate second, do a HELOC, because then you don't have a bunch of administrative work. But then again, you're on your own. But think about it. You might want to bone up on your renovation skills. You might want to work on your scripts. You might want to call your customers and ask them if they have any plans to renovate. And now you got another bite at the apple. Good luck, everybody. Happy hunting. Think about renovation. Hope you have a great day.